Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom. G'day guys, this is Jackson Milan, the Wealth Mentor, and we're here for another episode of Financial Freedom Secrets. And I'm joined by a new friend of mine from across the ditch in the US of A. We've got Zach Lemaster, who is a specialist in residential real estate, particularly in a turnkey strategy, an approach where they provide an end-to-end solution for those who are looking to invest in a relatively passive, hands-off way, because Zach and his team have done all the work. I think it's really timely that we have this conversation because there's a lot of fear. There's a lot of narrative being pushed by the media, as always is, and it does create a lot of uncertainty for investors, particularly when we've had huge growth in the market. Many people are scared of what the future is going to look like. So I thought I'd get the man himself on, so we can have a bit of a chat, unpack some of his genius, and hopefully share some value with you guys. So Zach, thanks for joining us. How's things?
Hey, Jackson, excited to be here. Thanks so much. Yeah, as you mentioned, it's crazy times right now, and it just kind of reminds us of why the fundamentals of real estate always hold true, and just brings us back to why we started investing in real estate in the first place. So we're excited to have a great show.
I'm looking forward to it, mate. So for those of the listeners and watchers who don't know you, mates, who are you and what's your business?
Absolutely. So my name's Zach Lemaster. I founded and operate a company called Rent to Retirement. And so kind of a play on words with our name, but that's very much what we believe is receiving rents to achieve some sort of financial independence. And that's what we've personally done. When I say we, my wife and I, we were both optometrists by education. And so we kind of have the healthcare background. I was in the military and the Air Force for 7 years after school on scholarship. So we kind of did that aspect. And then after that, we owned private practices in a couple different states and operated in private practice and did the healthcare thing for a while. But throughout that entire time, Jackson, we were investing in real estate. And we always liked the idea of investing in real estate from a tax perspective, also from the perspective of just creating additional streams of income, ideally to provide some sort of passive income. Now, we started to expand our investing at some point throughout different markets in different states where the best opportunity was. That was really the catalyst to allow us to scale up quickly over time. And that was the foundation of our business, Rent to Retirement. So what we do is essentially identify the best markets throughout the U.S. to invest in. This is from a cash flow appreciation perspective and equity position. We build our local teams there to find, acquire, rehab, or build the properties, lease and manage them for ourselves and our investor clients. And so that's really the bulk of the business, is basically following the systems that have allowed us to achieve our own financial independence, because we no longer work in healthcare. We retired from that many years ago as we built up our passive income. And so that's really the bulk of our business.
Fantastic, mate. Beautiful. So, look, property is seemingly complicated space. There's a lot to learn, a lot to wrap your head around. It doesn't matter where you're investing around the world. There's markets within markets within markets. And unlike the share market, where we've got a lot of transparency, a lot of visibility around the financial reports of each business, we've got the transparency of actually being able to see the share price. Not necessarily have that kind of level of information when it comes to property markets, right? And that can be really scary. Like, hey, do I invest in Miami? Do I invest in Minneapolis? Do I invest in California? Where do I invest? So talk to us a little bit about how you develop this fundamental-based philosophy around asset selection.
Absolutely. I mean, there's a lot of different areas that you can invest in for different reasons. What we believe strongly in is the foundations of real estate, of investing for cash flow and being in the path of progress, and obviously having the right people there to assist you. If you're investing across the world, as many of our investors do, we have many international investors, it's vitally important that you have the right team and systems in place to assist you to make sure those properties are successful. I mean, even if you are local, it's the same thing, but obviously more important in that setting. So when we go into a market, we want to make sure we are identifying areas that have fundamentally good cash flow numbers, make sure that the rents compared to the home prices allow for actual positive cash flow, especially if you're using leverage. Also, we want to be in areas that have landlord-friendly legislation, low taxes, future population and economic growth, make sure we're going to be in areas where there's going to be high rental demand and appreciation. That's what allows you to build a sustainable portfolio and also allows your portfolio to grow in value over time. We look at things like diversity of economy. We want to make sure that you're not in an area that's just reliant on like oil or gas or automotive, whatever the case is. These are areas that we've been successful for many years in the areas we try to focus on. We go into the areas we build our local teams. This is from rehabbers and builders, contractors to property managers. Make sure we have a lender that is able to finance ourselves and our investors in that area. And that's kind of what we build the ground up. But fundamentally, we want to be in an area where you're in the path of progress and you're also making sure that you can positively cash flow.
Beautiful. Yeah, look, the fundamentals are true everywhere in the world. At the end of the day, property comes down to supply and demand. And when we've got more demand than there is supply, then property prices and rental yields are going to go up. And if the opposite is true, then they're going to go south, and sometimes they're going to go south very quickly. Which leads us to the current state of affairs. I see so many people looking to procrastinate and kind of like wait and see what happens in this current economic situation, right? Like we've come off the back of COVID. We've now started to experience high inflation. And in turn, we've started to see that central banks have responded quite aggressively to hike rates. And which is fair to say, people are scared. They're worried about their property and their affordability being taken out of the market due to this interest rate increases. How are you seeing this play out in the marketplace, Zach, in terms of the numbers stacking up based on these changes?
Well, you brought up a good point. I mean, a lot of people are concerned, and there's obviously a lot of things going on politically, economically, and media likes to highlight those things. I mean, that's what brings in their ratings, right? So I always remind people, turn the blinders on and go back to the fundamentals. I mean, real estate is the oldest investment class for a reason. There's more millionaires made in real estate than any other asset class. If you just stay the course, we interview and speak with and work with a lot of people that are very successful real estate investors. And no one has ever come to me, Jackson, and said, hey, I just timed the market. I got lucky. Yes, some people get lucky in certain things, but I mean, what they do say is they've stayed consistent to buying real estate year after year, regardless of where the market's at, and making sure they stick to the fundamentals. So, I mean, and you also talked about supply and demand. That's what it boils down to. We've never before seen, at least in the United States, a situation where we are now with the disparity between the amount of demand we have and the amount of supply we have for houses. And houses are not being built quick enough to keep up with the demand. And especially in the areas that we focus on, there's an extreme housing shortage. Those are areas you're going to want to be in. So whatever happens economically, I mean, people still need a place to live. And, housing is a physical asset. You're providing a service to someone. It's a physical need. It's an essential part of life. So I think as long as you're investing in the right areas, you're going to be completely fine. We are seeing interest rates come up some, which they probably should. I mean, really, interest rates, as we were talking, are just coming back to normal where they should be at. We got used to these all-time low interest rates as, hey, this is what the normal is, but it was really artificially kept low, and interest rates obviously combating inflation. I mean, so you can still make the numbers make sense. Is cash flow going to be a little bit, less than it was previously with a slightly higher interest rate? Sure. We're still seeing prices increase over time, albeit it'll probably start to slow the curve. But again, the fundamentals just make sense, especially if you're using leverage. Properties are cash flowing well going into it. You're going to be just fine. And that's the place where you really build a sustainable portfolio. We've been through the 2008 period. Personally, owning rental real estate, we didn't lose a single deal. We did just fine. And now all those houses are worth significantly more. And that's a completely different scenario. A lot of people want to compare, okay, are we going to have a crash like we did in 2008, which was the worst real estate crash the U.S. has ever experienced? I mean, completely different scenario with different loan options. There was more supply than demand at that point. It's just completely different. So although there's a lot of chaos out there in the world and a lot of fear, we're staying hyper-focused. We're still actively growing our portfolio and helping investors do the same with the same fundamentals.
Makes a lot of sense, mate. I think like any growth asset class, you buy on the fundamentals because you see value and you hold those investments for the long term. And sure, the market can go up and down, but you've got to be in the market and accumulating assets because that's where money is made. And my view on this is that when we do have high inflation, which let's face it, for most of us, we haven't been to periods of high inflation in our adult lives. I certainly haven't at 33. You need to protect your buying power. And you can't do that by keeping your money sitting there in cash, sitting on the sidelines. You need to buy growth assets, and you need to be buying cash flow to allow you to be able to keep pace with inflation, to allow for then growth to give you upside. So there's no real other choice than to accumulate growth assets in time like this. Would you agree?
100%. You got to do something. Inflation can be a tool. It can be an adversary if you're just having your money sit in the bank, right? At 8-9% every month, just eating away. Or you can buy assets that inflation obviously increases at. And in an inflationary environment that causes house prices to go up, that causes rents to go up, cost of living overall to go up, you want to be in assets where inflation is going to allow you to ride that momentum. And also on the debt side, you are leveraging at today's dollars, which are being devalued quicker using inflation. And so it's good to hold a lot of debt right now that's worth less in the future. And you're paying the bank back with less money than you borrowed if you hold the debt long enough. So it's really how you look at it. But your point is spot on. You got to be doing something.
And look, with that, there's so many different strategies around property, Zach, and it can be overwhelming for investors, even if they've got a couple of properties under their belt. Maybe they're just getting started. So let's talk a little bit about this turnkey strategy. What does turnkey property actually mean?
And that's a broad term. So it's a very good point. It could have a lot of different interpretations. What we mean when we say turnkey is a property that's got it's comprehensively taken care of for you. That doesn't mean you're never going to have a tenant issue or something. I mean, that's just part of owning real estate.
Yes.
Rental real estate in a turnkey sense for us is a property that's been fully renovated or newly built, because we do a lot of build to rent and new construction, leased and professionally managed by a team that we fully vetted and partnered with in a local area that we know is in the path of progress and we have a proven track record in. So that's what we mean when we talk about turnkey investing. And our team is a turnkey business that assists people in purchasing in these areas where we've already established these teams, and also coaching them through how to build a sustainable business model long-term. We want to build long-term relationships with our clients, help them, on the tax, the legal side, make sure they have a clear vision based on their goals and criteria on really which areas are important to invest in, which asset classes. We do single family, multifamily. We have commercial, we have new build and development projects. So it's really about working with the investor on an individual basis to make sure we're meeting their goals and have a clear path of what the future looks like.
Perfect. Makes sense. And why would an investor consider, say, your turnkey strategy, say, to other real estate investment strategies?
I think turnkey is really beneficial for someone who fits one of these following categories. Someone who's just getting started in real estate. They need a little bit of hand-holding through identifying an area, or just getting started in a new market, who's a long distance investor, because it's essential that you have those teams and systems in place. Someone that wants to diversify across multiple different locations. It's important to have that core central organizational team to oversee your portfolio and make sure that you're investing in the right locations and setting up that portfolio appropriately. And I also think people that are looking to scale, we work with a lot of investors that they're full-time investors. They're out there flipping houses. They're doing value adds. They own multifamily properties and they're an active investor, but they still buy with us because it's an easy way that they can diversify into a new location and grow their portfolio quicker than they could on their own, regardless of what they're working on. So I think anyone looking to fit any one of those categories, if that fits your goals, I think turnkey is a great option that you can explore. We have a lot of properties that cash flow well. And we also have some properties that, especially in the build to rent space, where you can actually come into equity. That's kind of the common assumption is, all right, well, you're doing all the work, so I'm paying a premium for this and there's no equity position. Well, in today's market value, pretty much everyone's paying market value, or in today's market kind of climate. However, there is some unique ways that we can work with clients if they participate on the front end and build to rent particular areas where they can come into immediate equity. I won't get into that in too great detail because it's a specific scenario, but there's a lot of different options for people depending on your goals and criteria, and we're happy to explore them all.
Perfect. Love it. So one of the big parts here is there's a lot of home bias when it comes to investing in property, because let's face it, like property is emotional. It's a physical asset. You look at the pictures, you're like, the kitchen looks nice. I like the red front door. I can see the kids running around in the backyard. And for that reason, many people prioritize investing in their own home, their own town, their own city, their own state. It can be really nerve-wracking to invest, whether it's in another state or potentially internationally. So when you are investing somewhere where maybe you don't have that local sense of things, you don't know the right neighborhoods, you don't know the streets that you shouldn't walk down at night, what are the important factors or considerations as part of your due diligence when it comes to making sure that you're making sound investments outside of your comfort zone?
There's no doubt that can be daunting investing into, it's almost like you're going into this blind. So many people buy property that they've never seen. And we've bought, Jackson, so many properties, and we continue to buy properties that we've never seen, and we likely never will see. And that's not a bad thing. That just means we're doing our due diligence without actually physically seeing it, which you absolutely can in today's technology and different things. But it really boils down to obviously having that network of professionals that know the market and can give you some guidance. But yeah, you need to be looking up some neighborhood classes, I think. And we're happy to share all this due diligence. Again, we've done all this work for you and decided on investing in this location for a reason. So we're happy to share those stats. But we want to see areas where, especially, and this is on a macro and microeconomic scale. So for instance, let's say, okay, why would we invest in, say, Florida over, New York, okay, or something like this? Well, one thing we look at, obviously, home prices, and are these going to cash flow? Both have areas that have strong population growth, and there's great areas or reasons to invest in both. However, there's different things like legislation. New York is a very tenant-friendly, legislatively favorable state. So I mean, it's hard to evict people and it's very costly. Whereas, say, Florida, and there's a lot of people moving from New York to Florida. Florida is very landlord friendly. You can evict people very quickly. It's much more affordable. The cash flow makes much more sense. Has stronger population growth than say New York. I mean, that's just one example. That's on the macroeconomic scale. You want to be looking at states that adhere to your goals and how you're going to build a sustainable portfolio within a location. We have people that are attending city planning meetings on a weekly or monthly basis. We need to make sure we're say, okay, if the city is dedicating a lot of money to this area, if there's a lot of new jobs and growth and transportation coming into, say, this neighborhood class or this zip code, those are areas you want to be in the path of progress. And then, I mean, there's a lot of things you can look at, Jackson, to see exactly what's important in that area. You can look at neighborhood classes online. Neighborhoodscout.com is a great resource where they have free and paid reports, but you can get a lot of free information to talk about school districts, crime rating. I encourage people to stop looking at Zillow because that's such large statistical data. Some areas you need more of like really to hone in, but working with the right professionals in that area can tell you, because some of these areas may vary a mile away or a few blocks away, depending on, what kind of opportunity there is. So you can do a lot of research online, but if you network with the right people, and then ultimately you just have to invest in that area because that's how you get that firsthand experience and you really start to learn and know it.
Makes a lot of sense. It's about being methodical, right? Keeping the emotions out of it, trying to remain objective, using a proven process to go from the kind of top down macro and use a process of elimination until we get down to the micro to then make a decision based on the facts, the figures, the numbers. On the flip side, Matt, I'm sure you've seen a lot of horror stories in your day. What are the biggest mistakes that property investors make in your experience that ends up costing them time of getting into their next property, gets them stopped in their tracks of creating that multi-property portfolio? Where do people stuff up?
I mean, the sky's the limit, right? You can make a lot of mistakes, especially if you're going this on your own and you're not local to an area. You don't have the time to dedicate. I think the biggest problem, which a lot of people set themselves up for failure in the very beginning, is not being realistic with yourself. What do you bring to the table? Do you actually have the time and knowledge to really put in what it takes to be successful in this area? I mean, we've made a lot of mistakes ourselves and lost a lot of money forming wrong partnerships, or buying bad properties, not going through the proper due diligence on those. To find one good contractor, sometimes you got to go through 15 or 20 bad ones. Same thing with property management. So, I mean, you just got to understand, for a first-time investor, it can be a little daunting. And a lot of those, you hear some of those horror stories, right? Or if you're self-managing properties, being not screening tenants appropriately, not vetting them, not calling references, or possibly being too lenient with them and then being taken advantage of, or, letting them go through an eviction or letting them not pay rent long enough. I mean, there's so many obstacles out there. I don't have a story where someone's just really lost their life savings. That's the thing. I think real estate, you can make mistakes and you can get bruises and yes, lose some money, but ultimately it is a physical asset. Those are all lessons that you're learning to help you be a better investor long-term. This is the long game, and every property you go through, you end up learning to allow you to be a more successful investor long-term. But that's also a way or reasons to maybe look at going the turnkey route is to not have to make some of those costly mistakes. If you have a full-time job and you're not going to really make a life transition to be a full-time flipper, maybe you shouldn't be flipping houses. That doesn't mean that you can't come into building a portfolio, be successful, kind of learn a market, and then maybe take on one or two as your time allows, because you're buying back some of your time with your passive income. But I think the biggest advice I have for people is just be realistic with your time and experience and resources with what fits your goals and criteria.
I think that's super important, mate. We work with a lot of trades businesses, home services businesses who have the skill set to rehab and renovate for profit and do these value adds, but it's not necessarily best use of their time. They're better off focusing on their business and doing private projects and making margin on those, and having more of a passive wealth strategy where it's very much set and forget, where they can get these turnkey options that everything is done for them and they can just collect the income. There's so many people who try and apply their same principles they've used to grow their business to then try and grow their wealth, and it actually leads them astray and it can cost them money. So I think that's super important.
Cost of your time. I love that you said that, because even if you had a super successful flip on a property, right, and made 30% margin on that, but it took you a year to do it, and you're in there, having to hire and fire people or change toilets yourself, it's like, how much more could you have done applying that to your actual profession or, your business, and just buying real estate and letting real estate do what it does? I love that you brought that up.
Yeah, let it run its course. It should be boring. It should be set and forget. We shouldn't be looking to get our kicks from our investments. I think it's there's better ways to get fulfillment in life. I believe. So, mate, let's talk a little bit about financial freedom. It's this highly coveted idea that most of us are chasing, right? We want to be able to have the freedom and flexibility to choose what we do with our time. And for so many people, property is the asset class that they believe is going to allow them to supercharge their trajectory to creating that outcome. So, mate, in your experience, what are your top tips for somebody who's looking to create financial freedom through property investment, if you had to summarize it?
And we've done this, right? I mean, we've actually followed through and been through that process. And now, I mean, we work in this business because we're passionate about real estate, but we were high paid professionals that were able to, in relatively short period of time, not overnight. I mean, this still takes a lot of time and grit and consistency, but we were able to replace our active, mid six-figure income through our investment portfolios. Yeah, that definitely wasn't easy. And I truly believe, Jackson, that there's no such thing as truly passive income.
Sure.
Right. Even if you're giving your money to someone else and letting them just completely invest it for you, you still need to be watching what they're doing and monitoring. Same thing with having a manager on your property. I mean, you need to manage your manager and making sure that they're doing, and also reevaluating your portfolio to see, do I need to sell this property? Do I pull equity back out and reinvest it? Is this property underperforming? Do we keep this one? Or what do we need to do to make it perform at the highest level? But this is something that motivates, the idea of financial independence. I think when you actually achieve it, it's not this idea of I'm going to do really, nothing. I think most entrepreneurs that achieve this are still actively engaged because that's your personality. And but it's the idea of, okay, I can allocate more time and spend more time with my family. I can go on a couple month vacation and not have to, my rental properties are providing income for me regardless if I'm actively working. But I think as far as advice for people, just go into it understanding that there is no real overnight success, right? I mean, this takes some grit, it takes consistency and tenacity, and it's not an easy path. Even going the turnkey route, you will still have rental real estate issues, but that's why it's good to have a team to fall back on and get advice from. But I would say, stay hyper focused with one strategy at a time. Often we get this shiny object syndrome because and that's the beautiful thing about real estate and investing in general. There's so many different ways that you can invest, but you can't be ultra successful with all of them at once. And so I think it's really good to say, okay, be realistic with yourself. What is the best strategy for you at this point in time? Just go all in, stay hyper focused, and actually take action. And as you grow, I mean, say you go the turnkey route, right? That's an easy route to kind of get into real estate. Now that you have a little bit more time, now you want to go on to flipping or maybe doing a syndication or multifamily on your own, whatever the case is, then you can take on that project once you have that good foundation. But just stay hyper focused on one thing at a time and understand that as your knowledge base grows, you're going to be more successful. And the second piece I have is go out and network with people. I think that the network that you have and the people you surround yourself with, that's going to be vitally more important to your ultimate success than any investment you'll actually make. That's definitely been the case for us. And networking and being around the right people is huge.
Beautiful, mate. That's great advice. Just keep it simple. Don't chase the shiny objects. It takes work, right? And the more you get the reps in following the strategy, the more confident you're going to be, the better the opportunities that you're going to discover, and it compounds over time. So I think that's great. Now, mate, I get a lot of questions about single family versus multifamily. It's not something that is as common in Australia, given the price points of single property, single dwellings. It seems like it's much more attainable in the US to get a multifamily asset. What are the pros and cons for both? Why would somebody consider, say, a single family over a multifamily or vice versa in your experience?
Sure, there's lots, and those are questions we get all the time. Fundamentally, I think you should own both. I think there's benefits to having diversity across both asset classes. Single family, that's your bread and butter real estate. That is your predictable. That's what people usually want to live in most cases, especially post-COVID. There's a lot of people that work from home now and like the idea of their own space in a single family setting. We've seen an uptick of demand for single family rentals. Also on the retail side, you can sell those at highest value. You often get better appreciation, just normal appreciation, not forced appreciation, but just from your single family houses in the right areas. So I guess I'll do some bullet points for you, Jackson. As far as single family compared to multifamily, single family, very easy and attainable for most people. It's very liquid. You can sell, it's easy to obtain, and then you can sell to an investor or retail buyer, often who's going to pay the most for the price. You get best financing on single family, least amount of money down. And it's a great entry point for most people. It's fairly predictable and stable. And there's high demand and a high shortage right now for single family houses in most parts of the country. Quality, especially if you're in your single family in a good location, we tend to see a little bit less vacancy. So we like all those aspects about single family and highly encourage people to consider single family starting out. Some people like the idea of wanting to scale quicker in multifamily. And I think that's the benefit. There's economies of scale in the multifamily space. We kind of see this transition with a lot of our clients. And this is the route that we took as well, starting with single family or maybe mixing in a few small multifamily, duplex here or there, and then starting to scale those over time into larger multifamily, because that's where you can expedite your passive income into larger deals. However, multifamily, the lending space is a little bit more volatile. It's a challenge. It's best to build your foundation with single family and small multi to obtain the best financing from lenders because they see your track record. Multifamily, you can definitely have some value add components to those. Those are all valued on the income of the property. So if you can be a creative investor and find ways to increase the income, decrease the expenses, sometimes that's as little as just increasing rents over time or separate meters for water and putting some utilities or things like that. I mean, those are all ways that you can increase value and create value in multifamily, as well as just scaling up quicker. But I really like that trajectory where you start with small multi and single family and then build yourself up to the comfort level and the experience level to break into large multifamily.
Perfect. And I think the fundamental principle here is you need to walk before you can run. I see so many people trying to get, once again, too sophisticated with it and chasing strategies that are maybe a bit above their pay grade or where they're at on their journey. And I think it's important to lay that foundation first. I think you've laid that out perfectly. Awesome, mate. That's fantastic. So in terms of the context of maybe somebody who's listened to this, they like what you had to say, Zach, they're interested in finding out more. What does it look like working with you and the team? What's the kind of typical process?
Absolutely. We want to build long-term relationships with people where we help them. I mean, most people are not in this game to buy just one rental and be done. Hopefully, right? I mean, that's the idea is to build a portfolio to have consistent and substantial passive income. And so whenever we're working with an investor, we want to take the time to make sure we fully understand their experience level, their goals, criteria, timeline, resources, all the above. We work with brand new investors and experienced investors alike. And we have an excellent team here. So what we do, I mean, the first thing we do is want to jump on a consultation with you and just have a sit down to go through all the things I talked about, make sure we kind of have a plan. We leave you with some action steps and essentially get to the point where we're evaluating different markets and investment opportunities and walking you through that process. And there's a lot of things that go into that, right? This is not just about buying real estate. This is about building a sustainable portfolio long-term and generational wealth. So there's a lot of ancillary things that come alongside that on the tax, on the legal side. And we built that entire network. We have real estate specific CPAs. We have a real estate specific attorneys that you can utilize and tap into through our network. Just to set up your LLC structure. If you're an international investor wondering about how you can invest in the US, that's nothing that we're a stranger to. I mean, we have excellent loan options. That's one of the questions we get all the time, or what are your loan options? And there's a lot. And there's rather attractive loan options to international investors. And we'll walk you through that entire process. So our network of lenders and insurance agents and things like this to really make sure that you're building a sustainable portfolio and working with our team one-on-one. So that's the route we want to take, and we want to make people successful in this game. I mean, that's really the goal, because then they're going to come back to invest with us long term and refer other people.
That's what it's all about, mate. I think this is a marathon, not a sprint. If we invest for the long term, then everyone wins. So I think that's the way to go. Fantastic, mate. So we'll include all the details for people to get in touch. Mate, if you had to give one last golden nugget to anyone listening or watching this episode, what would that golden nugget be, Zach?
It would go back to what we talked about in the beginning of the show, Jackson, that there's a lot of noise out there and a lot of uncertainty and fear and confusion. And there always will be. There's always going to be something after. There's never going to be a perfect time to invest. So if you're waiting for that, stop waiting. And the time can be on your side, because real estate, that's how you build a compounding portfolio, is just owning real estate over time and consistently buying properties. So, I mean, the best time to invest is now, and not be bogged down in the details. So we encourage you to basically take action and network with the right people. We're here to assist you as much as you need to. I mean, feel free to check out our inventory on our site. That's rent2retirement.com, and reach out, and we'd be happy to talk more about markets, about what we're seeing, and continue the conversation we started here.
Fantastic, mate. I really appreciate you making the time. This has been super valuable. Guys, just remember, a good idea in theory remains exactly that, just a good idea unless you put it into place. So make sure you reach out, connect with Zach and the team, have a conversation, get the latest and greatest of what's happening, and make sure that you're pushing forwards in pursuit of financial freedom. Zach, I appreciate you making the time, mate, and look forward to catching up again soon.
Likewise, Jackson. Thanks so much.
Thanks, mate.